boys, we are back. We have bounced. We be, and we're here today with a special 7 hour 7 hours, boys. I forgot to tell you that in the
No
footer.
commercials.
No, 6 hours of commercials.
No
Dude,
breaks.
I'm an old man.
No breaks.
7 hours of the degenerate economy. We have our first on the spot why I should be in the degenerate economy. We're welcoming all the way from Puerto Rico. No, he's from Monaco. Charles Gillespie. Charles, welcome.
Thank you, Howard. Happy to be here and happy to make the case for the Degenerate Economy Index.
Have you heard me go on about this degenerate economy? Is it insulting? As you understand what I'm talking about? Do you get the essence of it?
I think it might have legs.
Speaking of legs, I might or may not be wearing pants. I'm at the W Hotel here in London. This is a multinational crew. Phil Pearlman has squeezed himself into a hoodie in his basement as usual. What does that say?
Lacrosse season, baby. Come on. They started practicing last week. The kids are excited. They're out there, swinging sticks at each other's heads.
Swinging sticks. And someone who swinging AI from Houston, Michael Parak, looking very good. You just all black. Very Steve Jobs of you. And so let's get into the degenerate economy, gambling.com, public company. So there's some stuff we won't get into, but just reported earnings, $GAMB, B as in bingo. And we are fascinated by this company because it's, under $1 billion, but profitable. And I wanted to chase down Charles and make his case for the degenerate economy. Phil, you'll walk us through that. But first, let's start with some Stocktwits catch-up news. Cash tag awards, boys, throw it up. April 30th. Obviously, people from gambling.com are invited. We are celebrating the best people in the community, best traders, best trade of the week. We got some great comedians. Francis Ellis is joining us. The actual cash tag of the year, best trader of the year. Tickets are really inexpensive. Just hit the cashtag.stocktwits.com website. We have about a week of voting. If you want to click the vote button when you go over there, take about 5 minutes. You'll know a lot of the traders. And we are holding this at the Stand, which is one of my favorite comedy clubs in New York. So just room for a couple hundred people. There'll be some roasting, and a lot of great people from the community will be there. A lot of great CEOs, a lot of great founders, and so hopefully, if you're in New York, which a lot of our listeners are, hit me up or just click on the site and get a ticket. All right.
But there are tickets available, right? There's still
like 100 tickets available. So we got a month. In New York, most people last minute. But if you're listening to the show, get on there. France is a great comedian as well, and I love comedy, so there'll be some roasting going on. Let's get right to the markets. Let's pull up a chart of the scaredy cats and the social VIX that we put together. So Stocktwits, this will be live. I kind of use it myself still. We've been just making sure. Excuse me, that we're measuring the right stuff as we go along. And so guys, we created this social VIX, and basically this is based around engagement, positive and negative, in the market across, 10 or 11,000 tickers. And unfortunately, this chart doesn't go back to where we're measuring from 2020. And early February, and kudos to the community for picking this up. No, none of us would have picked it up, but by early February, the line started getting extremely bearish. So to the point where about a week and a half ago, we were showing this, and we had reached the previous peaks had been right around the 2 mark, going back to even COVID. And then by early March, the social VIX had spiked to over 3. We were here on the show saying, you know what, as good as the Stocktwits community was at panicking early, they might be overstaying their welcome. Again, just one signal out of many that we use, but as right as everybody was, we could see. I think the piling on, the Dems were piling on Tesla. There was, I think it was just truly, a self-brought-on correction by the administration based on just the rhetoric. Phil, there's an egg chart here that I think the world
So
was
the
staring
social
at.
VIX, just to follow up on that, this is not live yet on the site, but it is in sort of a beta. I think we got to turn it upside down. I think we got to I think that's one thing. I think bullish should be up and bearish should be down. But I will say this, it's unbelievable. We have data going way, way back. Like we're able to mine the data from the messages going way back in Stocktwits history. And this is incredibly sensitive to price volatility. That's what I'm seeing so far.
Yeah.
Pretty wild stuff in that way.
Well,
and
when things get negative, they crowd around certain tickers, right? So Tesla, SPY, QQQ. So it's it's really truly not like the VIX because this is about messages and not trading. But people know what the VIX is, and what was fascinating about this is, Phil, and this is why I wouldn't flip it around, because we directionally went, we went from a flat, we don't care, in fact, there was a little bit of complacency. And over the course of 6 weeks, really caught that negativity right. If you were in on this, if you were in following the right people early around Tesla and some of these stocks, the bearish chatter started picking up right around early February to hit a crescendo, let's say it last week. And I was telling people last week, we may just be hitting, the bears are overstaying their welcome. So, anyways, not just
well,
one
you just used the term crowd. You said the term crowd as you were describing that. I don't even know if you're aware of that, but that is like dead on. Like this is like, where's everybody rushing to? Like, what is the opinion that everybody is sort of crowding towards? That's pretty interesting data.
Yeah, and people fell in love with it, and now we see, the fact that okay, the world's not ending, and things are settling down a little bit. So you've gotten this rally. The people that overstayed their welcome are going to lick their wounds, in some stocks that have rallied. But again, just one little interesting piece of data: how people interact around when the mood changes, interact around certain tickers. All right, and then Phil, let's go through some of the most interesting charts that you saw.
Let's just take a quick look at the egg chart. And this is price of a dozen eggs. Bureau of Labor Statistics updates this twice every day. And in the last inflation report that we saw for February, we saw a huge spike in the price, but that is only a monthly reading. This one, the price of eggs is crashing. We saw this happen. I just happened to follow this
because we were all buying chickens. Fox News told me to buy chickens, and now I got to do a Harry Carry on about 1,000 chickens at my house.
They're delicious, and you get a little beer can on the grill.
I don't know how to skin them,
so it's fine.
You can make wings with them.
But here's the thing: chickens don't take that long to grow. So if you kill a bunch of them because of bird flu, and you have to. It's not like an Armageddon egg situation where you're going to have egg inflation. And we've seen this before. If you look at this chart, late in 22, we had a spike, and that was a bird flu spike as well. And then you had to come back in. So, listen. And by the way, I do channel checks on eggs, and I was at Costco this weekend, and they're still pricey there. They're still over $4 a dozen, and they still have limitations. But over the next month, you're going to see the price.
There is a lag effect. This is my favorite diner in Houston, the House of Pies, delicious homemade pies, store-made pies. But their eggs, you can see just a couple of days ago, 50 cents an egg. I mean, my sister decided not to have any eggs because she's sensitive to this stuff, and it's right there. They give you this before the menu.
Well, the good news is, my cholesterol is like 72,000, and so I have so much eggs. So when I go for a blood test, I just have eggs stored that comes right out of my blood, and I just refeed myself protein. So it's the opposite of needing a liver transplant. So I think this whole thing's a charade, Phil. the funniest thing about the egg thing, because the Dems are guilty of this too, is there was literally, and I don't watch news, but I'm a member of a nice golf club that I frequent for cold plunges and free food, and they were literally telling people to buy chickens. This was Fox News was telling people. I'm not making that up. Like,
No,
sometimes you would just.
the clips were there. You can find them on TikTok.
And the woman who was running the agriculture was like endorsing this idea. And, Americans got to, tighten the belt and buy some chickens. And I'm like, I couldn't believe what I'm hearing. So again, everybody out there, and this is why I think the social VIX spike, the algorithms are messing with people's minds. People need to really take the apps off their phone. We're old men, but they need to take the apps off their phone. They're going to be messed with tremendously by whatever algorithm they choose to see. Can you imagine? People were worried about eggs. There's so many ways to get protein. And anyways, all right. So eggs was interesting. Phil, what was the next chart of the week?
So we're gonna talk to Charles in a little bit, and we have a great
Charles. Do
discussion
we have a
with him
guest?
today.
Do we have a guest today?
Charles Gillespie,
All the way from Monaco.
gambling.com. Great URL, by the way.
Guys,
Public
there's no
comment.
egg problem in Europe. Just get on a flight and come over here, and we'll give you as many natural Italian.
Listen, as Hegsworth say, we're tired of bailing you fuckers out. Have you not read Hegsworth's email he sent? I got it.
Yeah, a couple of dozen eggs for defense for the next 20 years, right?
I'm tired of us logging
right?
eggs. You know how much we pay on eggs to take the hooties and keep them off your back every year, for Christ's sake? All right, Phil, that one more chart, then we're going to get into the degenerate economy.
Yeah, well, let's just skip that chart. We'll go on to golf. You're hanging out. What are you doing here? You're hanging out with
one of my big trends.
Swapping
and Charles will know this.
Fluids with NFL quarterback.
Charles. Okay, first of all, look at Howie. Just a big night. That's the guy on the far right is not Bryson. Bryson's just next to me. That's me. I'm a little glistening. I think I had a couple of scotches last night. So last night, Bryson DeChambeau, I would say one of the best athletes in the world right now. Takes fitness seriously. 31 years old. Number one YouTube golfer. Won a few. I think he's won two majors. One during COVID, just one, and he will be playing his new driver. He is a geek. He's an engineer, so we can all appreciate that. Went to SMU and was really he's very scientific. So engineers, golfers, he signed a deal with whatever brand, Puma. Or I forget which brand he was, and he would talk to the engineer and say, "Guys, this club doesn't feel right." And engineers are like, "No, it's trust us, we're the engineers." And it was in his head. It turns out he swings the club faster than the robots. So yes, of course, he was reading things that the robots couldn't read. Long story short, he wanted to start his own golf company. He partnered with a friend, Reed Dickens. And they started LA Golf. Yesterday was the party for the launch of their driver launch, which after I hear I'm heading out to get fitted. And so Max got to meet Bryson. My friends there got to meet Bryson. He's a lovely guy. He's literally owns YouTube. I mean, he's going to be the Joe Rogan. Oh God. And here's me hitting Bryson's driver. This is something they don't want people to see, which is their new driver. That's Century City, me at Bel Air hitting into Century City after a few cocktails. Not bad. Max filmed me, and you could even see the surprised look on my face.
Does your husband play?
But you know what my friends used to call me, Phil? I was like, you swing like Jim Furyk, and you have the distance of his wife, Jan. So my nickname was Jan Furyk, because my swing looked like Jim's and my distance was like his wife's. Okay, Michael, one question,
just an observation in terms of engineers who reinvent golf things. I'm a huge fan of those stories. You guys probably know Philip Young in 1932, MIT engineer, realized that his golf game was off because literally the center of gravity on the golf balls of the time was off center. Sure. And he researched it, figured it out, and he founded the company we know now as Titleist for golf balls.
The best product in golf. Everybody uses it. But LA Golf it's just a cool startup. And what's amazing is it's like a media company meets we'll see if it works. But anyways, very fascinating to see a guy upend an industry. And we've seen this in gambling. We've seen this in the tech industry. We've seen you can't beat the man. Golf is controlled by a couple big organizations. Again, not the point. It's just a fun night with my son. And, and we'll get into this with Charles. I just think exponentially, and we're investors in a par 3 golf course, exponentially in single sports activity, the improvement in golf, and this comes to tech, Mike, from the camera and from Instagram and YouTube, the exponential improvement in a game like golf, the shots that tens of thousands of people can hit that one person could hit 10 years ago. It's an and you watch pro golf and where they hole out from week in and week out, it's like dunks. And so it's really a fascinating game that everybody is into, from teens to adults. So it's the internet, and now gambling with good golf, which just raised $45 million, and peer-to-peer gambling, which we will talk about, is one of my thesis, is exploding. And so that's great for gambling.com, which is why, it's a growth company. Why I think the degenerate economy is I wouldn't say it's idiot proof, but doesn't matter. A dead president or Trump can't stop it. And we'll talk about some of the administration moves around gambling as well. And then one more picture, really funny Howard story. I forgot Josh Allen there. So Josh Allen was at the event, great golfer, lovely human being, couldn't believe it. He's a Buffalo quarterback. And here he is. If you zoom in closely on Josh Allen. So I was very excited to see Josh. And as I said hello to him, I spit by mistake. As you sometimes see a little spitball come off. Phil, no one knows spit like you. And I have to wear windshield wipers when I talk to Phil. So,
dude, you're the guy who spit on Josh Allen's face.
Yeah, so you can see there's a little piece. So Josh agrees to this photo. And sure enough, as I'm like thanking him, a piece of spit flies from my lip, lands on his lip. He did not, like, they're talking about a champ. This is why the guy is, a superstar. Didn't even flinch. And I had to go up to him after and apologize and say, I don't have COVID. I think I'm happy to go get a blood test right now. And so I Larry David the hell out of him. Max, though, had a great time. All right. Let's get into it.
Let's talk about gambling. So theme of the day is the Degenerate 7 index, right? So we had the Magnificent 7. It's been underperforming. Now we're talking about the Degenerate 7, and we know some of the companies that are in it. Howard's been talking about them for a long time, but we have with us today Charles Gillespie, CEO of gambling.com, ticker GAMB. Are you a founder also, or just CEO?
Classic American founding story. Started the company at UNC Chapel Hill from a dorm room with my best friend.
Fucking awesome, man. That's
over a bet?
My alma mater.
So you bought the domain? How important was it to buy the domain in the 1970s when you started this?
We didn't exactly start with gambling.com. We started with the same strategy to build an affiliate marketing giant in the online gambling industry. But yeah, it took a few years and a little bit of luck to wind up in the right place at the right time to pick up gambling.com. We started out in 2006. And in 2011, with a little luck and a couple of phone calls, we were on the receiving end of some information that the previous owners of gambling.com, which was a UK listed company, were in deep shit and needed to raise money very quickly. And they had tried to auction the domain name to the industry, and they put out, they said reserve price $9 million. And this was 2011. It wasn't worth $9 million, but it was probably worth a lot more than the $2.5 million they took from us over a weekend, so that they didn't go bust on Monday.
Did they ratchet some equity with that, or just straight cash?
Straight cash. It's always been an affiliate website. You know, we're an aggregator, right? Like we're like booking.com. If you want to gamble online, you come to gambling.com or one of our other websites and we tell you who's got the best odds, the best promotions, the best deals. Let's say you want to play some
It's
specific
nerd wallet of gambling. Nerd wallet of gambling. Yep.
Exactly. And it's always had that business model. Back in the day, you know, prior to 2006 when the US market closed with the legislation on the last day of the legislative session in 2006. They were making money in the U.S. and then there was this unlawful Internet Gambling Enforcement Act thing, and basically online gambling in America more or less went away. And they had an opportunity to pivot that website to the UK. The UK has been the world's largest online gambling market.
Because that was where the poker stars and all the poker stuff went, is offshore.
Yeah. I mean, you know, there's the UK, and then there's all these kind of crown dependencies, right? You got Isle of Man, that's where PokerStars was. You got Gibraltar, you got Malta, you got the Channel Islands, you know, and obviously it's a very high cash flow industry, right? Like if you're good at running an online gambling company, it creates a whole hell of a lot of earnings. Yeah. And you can kind of do it from anywhere, right? You don't have to have a big factory full of people or anything. You know, all you need is a couple of computers, servers, some smart people, right? And therefore, a lot of these companies fairly early set up offshore, right? So all the jurisdictions I just mentioned, and a lot of that had to do with the UK being the first properly regulated market for the industry. So they regulated all the way back in 2005. And at the time, you could service the UK from basically anywhere. You could be on a Caribbean island servicing the fully regulated, legal online gambling market in the UK. After 20 years, it's kind of tightened up a bit, and there's more fine print. You can't just kind of do it from anywhere. But it led the industry to some pretty sophisticated tax planning.
And so, how are you guys? So it's a great model, because you're not as marketing dependent as like a DraftKings has to be. You are making money, right? And it looks like you have a lot of operating leverage as well. I'm just looking at your year-over-year revenue and net.
Yeah, we have adjusted EBITDA margins around 40%, and we have had for many years, and that's great. But the real kind of beautiful thing is that we convert 80-90% of that to free cash flow, because we have a highly optimized tax efficient strategy, and we don't have a bunch of things affecting EBITDA. The EBITDA is reflective of cash flow. One thing we hear from investors a lot is like, they don't know who's going to end up at the top of the pile in 5 or 10 years, right? Is it going to be DraftKings? Is it going to be FanDuel? Somebody else? And from our perspective, it doesn't matter who it is, right? And we're going to make a lot of money 5 and 10 years from now, and we make a lot of money now, regardless of who's at the top of the heap. Okay, we work with every online gambling company you guys have ever heard of, plus another couple hundred more you probably haven't heard of. And regardless of who ends up at the top, we're going to make a lot of money. So from an investor standpoint, it's like a cleaner, more elegant way to make a kind of structural bet on secular growth of online gambling to back the nerd wallet or the booking.com of the sector. We also happen to have the category defining name for the entire sector, than to try to pick one of these individual operators.
Yeah, that's why I'm fascinated and reach out to you, and your team reach out to me as well. So there's the picks and shovels. There's the lead gen. If we look at this whole degenerate economy, I look at it from the financial space. You have the front end, you have the Robinhood, you have the Coinbase, you have the DraftKings. I think they're more front end than tech, because they own SportsRadar, then they spun it out, I think. And then you have, FanDuel. Yeah. And so I own some SRAD, full disclosure. It just seems like an interesting company, their guts, their data. I own some gambling.com, full disclosure, because it's a much simpler business model for me to understand. Because of the size of the company, it's not in my Degenerate Economy Index.
Not yet.
What's that?
Not yet.
Not yet. I mean, it's a candidate, and no one should take offense by being in any index. It's a constantly changing index. It's publicly displayed, but I like ICE, CME, CBOE. Like you don't normally consider those gambling companies,
Mm.
but literally the futures market are where a lot of these bets are going to be going in. And we talked earlier, Charles, before we went live about Robinhood and futures betting, right? Like, and the
Yeah.
fact that you said someone from Kalshi's going on the, what were you saying? Someone
Yeah,
from,
so it's this guy named Brian. I'm not sure how you say his family name, Quintense. Brian Quintense is he's a board member at Kalshi, and I don't know Brian, but he seems like a pretty switched on and smart guy. He's also head of public policy at Andreessen Horowitz, which would be,
this sounds a little bit inbred to
incredibly
be in charge
interesting
of
position to
policy.
have.
Yeah.
Yeah.
So you can see where we can see where the ball is rolling downhill finally. So much like it's kind of like I compare the two industries a little bit to like crypto. Crypto's kind of like in the area where gambling was for a long time. Knowing Jason Robbins and some of the board members there and friends of mine over the years, they went from going to make it to fail, from going to make it to fail depending on the laws. And then I find out even yesterday, because I don't gamble, is that if you can't even use DraftKings in California. Like we're still in like a third world gambling country, if you will, in the United States, right? Like, and I know yeah, like I can't believe what I'm hearing because I just assumed degenerate economy means it's the whole economy, but it's
selective access to the
selective access to shock me as a non-gambler.
You
So where are we in the whole thing? In the term of like the great scheme of thing, where is gambling in general?
Mega early in the United States.
So that's important for people to know.
Yeah, it is. Like the story of online gambling in the United States is fascinating because for a variety of reasons, complex federal versus state politics, cultural reasons, religion, conservatism, America is still a very Christian and very religious place. And for a long time that prevented regulation on these things. I think that's a lot less of an issue today, but the politics is still complicated. There's a lot of money on the table and people have to agree how it's going to get cut up. And you've got, the United States has the biggest land-based gambling industry in the world. Okay. That's very different than Europe where there's no Las Vegas, right? So, you've got more endemic existing gambling interests in the United States than in any other country.
And they don't want to see the same space. They want to protect what they got.
They want to protect what they got. And to the extent that the pie's getting bigger, they damn well want their piece of it as well, right? They don't want to, concede market share or in any way lose kind of strategic position, right? So these political conversations are hard. They're legitimately hard. And we're getting there, right? You've got 30 plus states now with sports betting. You got a handful of states with iGaming, but we're still missing California, Texas. Florida and New York do not have iGaming. Florida has sports betting, but it's a bit half baked because it's this, basically monopoly situation with the Seminoles where they run Hard Rock and they can theoretically bring in other partners, but then they get to charge some kind of exorbitant monopoly fee to the partner. So it's, you haven't seen all the big operators pile into Florida. We are big, strong advocates of options for consumers, right? The more online gambling sites there are in any given market, the better they are. Okay. Because they have to compete for user interest and user attention. If it's a monopoly, they can get away with offering a terrible service because it's the only option. But if it's a state like New Jersey, where you got tons of iGaming options, tons of sports betting options, it's a dynamic marketplace. It ends up with the best result for the consumers, which, we're in a very convenient position because what's great for us is what's great for consumers. So you look at the expanding regulation with the, what's likely to happen with the CFTC. They've got this guy, Brian, who's going to be the chair. Reading the tea leaves, it would seem like they're going to, give a green light to a lot of these prediction market businesses to possibly do sports with permission. Maybe, I don't know. None of this has been figured out yet. But if they do go in that direction, we're going to see we're going to see the next leg up of this American sports betting renaissance, which started in 2018 with the Supreme Court decision, which allowed all these states to go out and actually regulate sports betting in the first place. But, kind of if the federal program goes over the top of these states, they're going to sue, right? Because they're making a lot of money off of it. At the end of the day, there's a lot of money in this industry, and regulation's about protecting consumers. It's also about tax revenue, and these state gaming regulators and state legislators aren't going to willingly give up hundreds of millions in gaming tax revenue. They get used to that. It's part of the budget. So there will be fireworks.
And is the word whacked used a lot anymore? Like in the Chicago in the 40s? Are people getting whacked?
Not that I'm aware of.
Okay, good. So there's no whacking.
They're a public company. They can't. There's no whacking.
I didn't say they're whacking.
DraftKings can't whack.
You're in the gambling. I didn't say I was not accusing gambling of whacking. I'm saying there's whacking going on.
We haven't whacked anyone, and
it's
none
like
of our
fracking
people
for
have been
gambling.
whacked.
Your whacking is like fracking.
You don't think you're gonna have to defend yourself, Charles? Towards,
the TAM, Charles. When we look at this, you get some idiot analysts from CIBC. They ask you what the TAM is of this space. Do we know what the TAM is of this space?
Yeah, I think for online gambling in general, it's 100 billion plus. In the U.S. now, online gambling's 40 or 50 billion, but it's still growing. With a double-digit CAGR. That'll accelerate as and when you get more states. Of course, we expect to get virtually all states in time, right? But how, does it take 5 years? Does it take 10 years? I don't know. But with the expansion of sports betting that we've seen since 2018, it's the fastest expansion of regulated gambling in any form in the history of the United States, right? Like this has, even though to some of us in the industry, it may feel like it was slow. It has actually happened faster than any other gambling expansion. So, I like you asked at the very beginning, where are we in this whole thing? We're at the very beginning. My business partner, Kevin, the co-founder and CEO of the business, when we bought gambling.com, when we pushed this thing into the UK in 2010 and 11, we were competing for search rankings. We wanted to rank #1 in the UK for best online casino and all this.
That was the world. If you own that, you own you can control your margin. So
and even back then, all those lucrative keywords and those positions were sewn up by what appeared to be pretty serious competition. And we looked at that and we were like, okay, are we too late? Have we missed this? Can we actually compete in this? And now looking at it 15 years on, we're probably the biggest affiliate in the UK by certain measures, and we've absolutely built an enormous business out of the UK, and it's making more money than it's ever made before. Like in Q4 last year, which we just reported, it was our best quarter of all time. We've never made more money with this business than we are right now. And when you see the UK like that, and you think, okay, this country's had regulated online gambling for 20 years. A lot of people have already signed up for accounts. How is it that we keep making more and more money there? Well, it's because as the market matures, people spread their business around to more and more operators. Basically, there's no loyalty. They want the best.
Very important part of this business is there's no loyalty.
They want the best bonus, and the best bonus comes from setting up a new account. It does not come from reloading an existing account.
Yes.
And our business is fundamentally built on helping these people set up new accounts.
That's why I'm tentative of putting front-facing apps or businesses into the Degenerate Economy Index, because there's no loyalty. So I know, Mike, you have a bunch of questions, so go ahead.
No, just coming from the AI perspective, and it's the single biggest question in AI is, are we beating China? Online gambling and you guys and are we beating China? Macau, etc. Are we beating China?
You can't beat China. They love
China's not. So when we started this business all the way back in 2006 at UNC, we knew we couldn't do it in the US. And so we said, okay, if we can't do it in the US, it's not regulated, we'll go to the next biggest market full of people that love to gamble. which is China, right? So I've networked my way into the top of all these Chinese listed companies and on Nasdaq, and we get funding and we move to Shanghai to pursue this business at the very beginning before the UK.
Good city, Shanghai. You picked a good city at least.
Shanghai is awesome. I mean, we were there at like the golden era when they still liked Americans and when they still wanted American money and American investment and talent and knowledge and everything else. It's completely changed now.
Yes. But what a time back then. What a time back then.
Everybody we know that was there then is now since left. You know, it's a completely different situation. But in 2007, 8, 9, it was really, you know, all the American VCs that were there. And it was the new frontier. And like, it was so dynamic. It was an incredible time to kind of cut my teeth and come alive as an entrepreneur. But anyways, yeah, you look at that today, you know, not a regulated market. And, you know, to the extent that they ever do regulate it, it's going to be locals that make money off of it. You know, it's almost like if you ever hear anybody come to you and pitch you on Chinese lottery, okay, and you're not in Shanghai or Beijing and with very like networked local people, it's a scam, okay? It's like this kind of token thing to get people excited in the West. I mean, what could be more compelling than Chinese lottery, right? I mean, oh my God, you know, billion people, booming economy. It sounds
love
like
to gamble.
Can't miss.
By the way, now we have a Trump and Melania coin, so China doesn't look that much different than the United States. And what is Europe? So okay, so China's out. This is, what would you say? U.S. Europe. Sorry, Phil. U.S. Europe, and then we'll throw up some charts, Phil, and show how great this business is.
I mean, the U.S. is so fascinating.
I understand, but where's the U.K. where it was 10 years ago? It was all. If you could place all your bets anywhere, where would you place them?
And we've been kind of dancing around this point, but the fundamental point is the U.S. is behind. It's way behind. Okay, and you don't see that very often. You know, does anybody have another example of an industry where there is black and white European technology leadership decades ahead of the United States?
Backgammon.
Many of those.
They make beautiful backgammon boards.
Okay, yeah, exactly. Handbags, and like luxury hotels, right? I mean,
it's so true. It's so true. And I was just saying, we need a gambling czar. So maybe I'm the guy.
So back in 2011, like how were you guys thinking about the U.S.? Were you thinking,
let's talk.
Wow, if that dam breaks, it's going to be huge for us, or you know, like, or
we had totally given up hope.
We're just going to Europe.
We had totally given up hope on the U.S. regulating. Okay, so you know, in 2006 when I got this whole thing started, I sent a letter to my congressman. Okay, and like, so I don't really remember who it was. I sent this letter to D.C. for this North Carolina Congress person, and I was advocating for them to regulate online gambling. I was just like, look, you know, like, regulate it, tax it. You should do this, and then I can build this business I want to build in the United States. And at the end of the letter, I wrote, but you're probably not even going to read this, so you know, whatever. Have a nice day. And I remember I was sitting at lunch with my boss at the time, and I get this phone call from some random number, and it's the United States congressman who's read my letter and was, you know, took great umbrage that I thought he wasn't going to respond to the letter. So he personally calls me, and I have a 5-minute chat with this guy, and he was very nice, but the tone of the conversation was ridiculous. It was online gambling funds terrorism. Okay, that was his take on this, and that was such an extreme. And you know, this wasn't so many years after 9/11, right? Like, you know, you put that terrorism label on anything, and it's nuclear toxic, right? And that told me everything I needed to know. I was like, these people are never going to regulate this, or if they do, it will be 20 years from now. And you know, the great irony of this whole thing is, the very first domain name I registered in the industry was startgamblingonline.com, summer of 2003. And in North Carolina, in Charlotte, and like working my summer job, like after hours on my computer. And then almost 20 years to the day, the North Carolina legislature passed the bill to regulate sports betting. It was 20 years, literally to the day. I checked it, and it was just, it's just kind of crazy how that coincidence lined up. But it took them 20 years, and Kevin and I in 2011, 12, we just were not thinking about the U.S. at all. So by the time you got that Supreme Court decision in 2018, we were 0% focused on the U.S.
Yeah.
And it caught us a little bit off guard. We had this great thing going on, but the tanker ship was pointed at the UK, it was pointed at Europe, and we had to turn this thing around. And it took 18 months, 2 years to do that. And when we took the company public on Nasdaq in 2021, we didn't really have that much North American revenue, and it was
So no one wants to cover you, and you got all that problem. You're kind of a small cap.
Totally. It was not a SPAC deal. It was a proper IPO. Jefferies, Truist, and Stifel were the banks.
Great.
It was July 2021. We got the deal done. It was hard. Did not meet initial expectations as advertised by the banks, but we got the deal done and became the first and only online gambling affiliate company that's publicly traded in the United States. And to my great surprise, we're still the only one publicly in the United States.
That's great. And where's the headquarters in the U.S. and how many people?
Charlotte. So Kevin's down there with our North American leadership team.
Got it. And just take a step back, and then Phil, if we could pull up some charts. Here's how early we are. So you say we're mega early. There's tech reasons we're mega early. AI, educating people, kids, ChatGPTing bets, ideas, because idea generation has never been easier, and there's sports everywhere, right? And now you turn on ESPN, and they've got the odds for you. But here's as a 60-year-old, here's how early we are. And I can appreciate this and respect how much time it's taking you, because we've been building Stocktwits for 17 years, right? And don't have half the 1/10 the business you have, but because we're like you, we're on the front end, right? Lead gen, and we're not embedded in the actual markets. But along comes some things that the lights you start seeing things, right? Like there's DraftKings, there's Underdog, there's new ways to bet, and those are still all front ends, and there's no loyalty. And I don't want to be in that business because there's no loyal. I mean, geez, I got to spend hundreds of millions, billions of dollars to get customers that aren't loyal to me. That's a tough. I mean, God bless those people, but that's a tough business to be in, as you know. And then there's everybody going to want to come in this business because of Kalshi, Polymarket, who are kind of posers in a world of CME, CBOE, ICE, which are the true poly markets, right? Where bets truly get laid all day through spreads and volatility. So CBOE at all-time highs, CME at all-time highs, ICE. But then there's this new world of stable coins and meme coins and peer-to-peer and pseudonymous meets real personality. And the world that I see, tell me how crazy I am, and I'm okay for being told, where I go, I want to bet Phil, I don't want to trade an option to see how much money I make versus him. I want to say, Phil, let's go. I got Nvidia up 10. My wallet against your wallet. I got Nvidia up 10 after the earnings. You take the under. Let's bet $300. It gets settled in a peer-to-peer wallet. I don't think we need anybody involved in that trade. We're on a Solana wallet. The data's controlled by like the time of the market is closed by the Nasdaq. The blockchain settles the trade, and the money swaps between Phil and I. That is a future that doesn't seem that far away. And that's what, I'm a 6-year-old who doesn't place bets, and I can see myself betting all day in that world. Now, it's like I said.
Dude, we would bet on the stupidest shit all day.
And,
it would be ridiculous and stupid and wonderful at the same time.
But I'm saying, but here's the point. At some point, we do have market knowledge. So at some point, my son, who will never learn zero-dated options, who won't learn spreads, could then say to all his friends, my dad is really good at this. And now they could piggyback on our bets, right? And so now you have a social network of betting too. So derivative bets based on the people that were making the bet, which is the same thing that happens at a boxing match theoretically. So if I'm thinking like this, and then you're telling me we're at mega early, what do I have to be most careful about? Is it just staying alive until this happens, or is this stuff gonna like if me saying this out loud to you? Are you saying these guys are crazy, or is there a world that this exists?
I think it can certainly happen. I think, given the war on crypto in the United States, which hopefully is over, and the fairly heavy-handed approach to regulation in all forms that is characteristic of doing business in the United States, it may be the case that this beautiful peer-to-peer, decentralized, smart contracts gambling world that you've painted emerges not in the United States, right? Maybe it's the UK, maybe it's somewhere in Europe, maybe it's, who knows, China. But I don't, there's no technical reason why that wouldn't work.
I think it could work today.
Yeah. So, maybe people just need to package it up in the right way or something. But,
we're working on that. You're going to be getting a lot of emails from me, so you can just set up a fake account and just have an AI read them. But I apologize in advance for the emails you will be receiving. So no, but Phil, think about the beauty of this. Phil, think about the beauty of this.
Dude, I'm already thinking about like a golf app. You go out with $3.
You don't need the golf app.
You're playing golf. It's
a
peer-to-peer betting app. You're betting on putts. You're betting on, you could make 1,000 bets. It tallies it all up, and it's like, Howard owes Phil $20. Michael owes Howard $10. Phil owes Michael $20.
But then I can play you. Cool. I can pay you in meme coins, and then we can parlay something with another game that night. But anyways, this is where it's going. It's a language, and I just think you said that's the most important thing is because I needed it. We're mega early. When I find out that California doesn't even have this stuff, I'm like, Jesus Christ, I got to pace myself because this is still probably 10 years out. And then AI is going to wrap itself around all of this. Where are you seeing with AI?
Big bear hug.
Are you guys AI?
What do you see about AI today, Charles? What do you see about AI today?
So look, I'm a geek. I'm a nerd. I made websites as a kid. I love technology. I've got a big Nvidia GPU cluster here in my office that I just tinker with. We're all about it. So, there's a lot of advantages to be had. I mean, the most obvious one is software development. I mean, if you're sitting there hand rolling software at this point, you're simply doing it wrong. The quality of the coding is astonishing. And its ability to translate basic product specifications into code is great. I mean, the most important programming language in the world is now English. You just tell it what you want. Now you still need, sharp people that understand every single line of the code. You got to go through and debug it and quality assurance it and check it and stuff. But, from a kind of prototyping, getting something stood up perspective, couldn't be more helpful. And
spot on.
We're having like this AI hackathon thing next week, and we're pulling out ideas. And I said, well, okay, why don't we have like an LLM go over every single one of our Slack messages and basically identify instances where we've communicated some direction of travel, some policy or plan, just do this. And those plans have been either misunderstood or misinterpreted, or just not, for whatever reason, a team is traveling in a direction other than the intended direction. Why not just have an LLM go through and just read all of our Slack messages every hour, and to the extent that they find something, some sort of corporate misalignment, for some lack of a better phrase, just tell the people and, course correct more quickly than us figuring it out 2 weeks from now when they present, their OKRs or whatever. So I think it's a complete and full revolution of business and pretty much all things. And we're trying to lean into it so that we can be on the front of the wave and catch that wave and benefit from it. But, it's affecting a great many things. So I mean, just to kind of close off the thought, I put this in the earnings call script, but it's basically given us a license to be more ambitious. We can simply do more things than we would have previously done because you can just do it all faster. So whereas in the past we might have said, we don't have enough resources for that. We don't have enough focus. Even if we have the money, you got to have enough senior talent, bandwidth in the senior team to watch the project, babysit it, make sure it goes well. The bottleneck on all this stuff, it's not really money. It's talent. Do you have people that can deliver these projects? And, our people can now just deliver more projects, which is very exciting.
Well, the word license to be more ambitious, I'm stealing that because that is genius. Like the reason I came back to Stocktwits as a non-engineer, I couldn't be ambitious because I was always held up by like explaining what as a non-engineer product person would have to explain to his engineering team, right? Today, with the social VIX, for example, or our AI summaries, these are my ideas that just get done. Like run our streams through AI, and we have updated. If you show up on Stocktwits, you don't have to read the messages; it just tells you what's happening. And so you get to course correct, meaning the stream won't course correct. You, the reader of the data, can course correct based on what you've read. So again, that's a great summary of what AI is. It is I called it a new era of business people versus engineers. We are back to the era of business people. And we were back to this era where you can be ambitious without having to hire engineers and worry about ergonomics and how they're feeling at their computers.
So Howard, really what's the market cap? What's the low end for the Degenerate Index in terms of market cap? This is gambling's trading under $1 billion, but it's getting there.
It's just a matter of liquidity, right? Like the world that we live in. I'll give you a perfect example. Robinhood, they go public at 30 billion, drop to 10 billion. There's no ETFs that want to own $8-10 billion companies. So it's a damned if you do, damned if you don't. We suffer from a broken structural market in many ways. The first thing is ETFs structurally, people don't know this, can't buy IPOs. Back in the old days of of mutual funds, Garrett von Wagner's of the world, everybody could buy IPOs, whether you're a mutual fund or not. So there was an IPO game. Okay, we didn't like that game, whatever. But now we have a structural problem where market cap rules the world. And so, what the S&P is ruled by market cap. And it's worked and it's been marketed to hell to everybody, right? Like, hey, don't pick stocks, go market cap. So it's been very hard for companies, small caps, even if they have a great business, to get recognized, right? And then, for example, Robinhood now has a new problem. Doesn't matter how they do. So let's take a perfect example. Is Wells Fargo. It doesn't matter who they rip off or if they're running a criminal organization. As long as they're in the S&P 500 and Betty Lou's allocating to her 401k every month, Wells Fargo stock is going to get bought when she allocates to the S&P 500, which is a cock block to innovation because Wells Fargo doesn't have to behave. Now, again, it takes years for these companies to drop out of the S&P 500 because of these reasons, because of market cap weighted. So I don't know what it'll take. It'll obviously take a lot of smart people who say, listen, I'm going to own 5 of the big caps and I'm going to add 2 small caps, right? And so for me, with the degenerate economy, what's interesting to me is, I'm trying to pick between the CME, CBOE, maybe Netflix was the degenerate economy, DraftKings, Coinbase, Robinhood, Flutter. But gambling.com fits in there because they're profitable. And the fact is, it doesn't matter. It's almost like a private company. It doesn't matter what their market cap is. You just treat it like as an exposure to a private company, because what drives stock prices in the end is earnings. You can trick, as we've seen with SPACs and other things. You can trick people with meme coins, but in the end, the market pays for cash flow and pays for profit. So it's going to be up to gambling.com to deliver. If you look at their business model, they're in the right business to deliver because they're making money off everybody showing up on the internet to gamble, a la NerdWallet. I think that the question comes down to, Charles, how do you get Wall Street? NerdWallet trades at 80, 0.8 times sales, right? So So in the end, when you're a lead gen company, Phil, you trade at a much lower multiple. So I think part of gambling.com we can chat about is how do you get the multiple up, and that's probably different businesses. And then Mike, as an analyst, you tell us, Mike.
Charles, you have a comment, and then I do have a point.
So there's lead gen, and then lead gen is you're generating a lead, okay, but you're not actually delivering a paying customer. It's a possibility of a paying customer. What we do is deliver paying customers, so it's a little further down the funnel than pure lead gen. But I agree with you. It's a mixed bag for these performance marketing, lead gen, affiliate marketing companies. They don't necessarily have the highest multiples.
Yeah.
But it's an incredible business, right? I mean, like, it's kind of like the best business model in the whole industry, according to me and a lot of other people you would talk to.
Yeah.
So we're doing both. We bought this company, RotoWire, a couple of years ago. RotoWire is like the original authority in American fantasy sports before daily fantasy sports was even a thing. And they have a nice little subscription revenue business. And that, it's not B2B SaaS, if you will. It's B2C, and it's subscription, but it's recurring, and it's reliable, and it's forecastable, and it's almost certainly deserves a higher multiple than what people think is fair to put on our affiliate marketing business.
Yep.
And at the end of last year, we bought another business called Odds Jam. They've got there's actually two businesses, Odds Jam and then Optic Odds. So Odds Jam is a B2C subscription premium odds service. Okay, so it's best in class odds data, and they identify like arbitrage bets and positive EV bets, and you get on there, you get your subscription, and then they help you beat the bookies.
Mm-hmm.
And then in building that, they realized, okay, we've got some of the best odds data in the world, like maybe the best odds data in the world. And they set up this separate business called Optic Odds to commercialize that data for the operators, because the operators have this, the operators have to manage their risk, operator being the industry word for a sports betting operator.
Mm-hmm.
Just as, if you're going to go buy bonds, right, you're going to have a Bloomberg terminal, and you're going to understand what all the bond prices are before you go out there and start.
It's like fact set of data of gambling.
Yeah. So, it's like the Bloomberg terminal of odds, right? If you're over a large book and you're taking a lot of money, you need to know where your competition is. You need to know if you're, off market and are going to get hammered with sharp money and lose. Like these sports betting operations get hit all the time, right? Like, I mean, a lot of these bets win, obviously. It's actually quite a small margin business. And if you don't run it properly, those margins can, go negative and you're losing money, right? Like risk management is a fundamental part of these operations, which I think is underappreciated by a lot. So anyways, they've got this fantastic business, which, pretty much solves that problem for the operators, giving them this best in class odds data. And of course that is B2B subscription revenue. We know exactly where that's coming from, what, the forecast, it's just very clear. And of course that, along with the RotoWire revenue, we think should be valued more richly, and that revenue this year is going to be well over 20% of group revenue. And then, if you look at our affiliate marketing business, a lot of that revenue is recurring as well. So, if we send players on like a revenue share arrangement, even if we turn this whole thing off tomorrow, we still get paid on the revenue share from those players we've previously sent. And when you combine that with the subscription revenue, it's over half of group revenue is recurring in one form or another. So, we're going to continue to grow the performance marketing, affiliate business, but we're also, very excited about growing these subscription revenue businesses. And at some point, I think the street's going to have no choice but to, put us in the same bucket as Sport Radar, Genius. We're going to have, meaningful revenue of a similar variety to that, plus this killer marketing business with, incredible brands. we IPO'd the company at $8 a share. Today, I don't know where it is, 14 or something like that.
Yep.
But when we went public, we had 42 million in revenue. Last year, we had 48 million in EBITDA. We are absolutely delivering.
You're trading at 10 times earnings. Well, great job. Did we miss anything that I should?
Let's do
cover
this really quickly. Let's just talk about AI really quickly.
But before we do that, I just
Go
wanted to touch on this point that Howard, you brought up on Wells Fargo and as being part of the index, because we talked about Tesla a week or so ago, and the stock obviously was down, and now it's up. They tried to sell it on the lawn of the White House, and now basically all the sell side and the buy side has come out in defense of Tesla on the fundamentals. You had Dan Ives, Adam Jonas of Morgan Stanley on the sell side. You had Kathy Wood on the buy side, basically pounding the table. And the point I'm making here is that I'm still going to continue my secular fundamental call on Tesla on the fundamentals, that the brand is very damaged, etc. But the core thing I want to point out is just your point on Wells Fargo and the index. Tesla is in most of the major indices, anywhere from 3.5 to 4.5% of the Nasdaq index, S&P index is Tesla. So it takes a while, as you pointed out, Howard, for these things to be go onto indices, index trading, and then go off them. The fundamentals have to deteriorate, and the market has to recognize the fundamental deterioration before they're taken off. So that is a underlying support for companies like Tesla in this volatility game. I just wanted to point out the obvious. Unlike Wells Fargo, their business is not evergreen. Wells Fargo is a bank. It'll do what banks do. Tesla is a different thing on the auto side, given the intense competition from China, given the brand damage in Europe, etc. So I just wanted to highlight that index presence of Tesla of about 3 to 4 points.
Okay, so I just want to quickly. We're running. We're out of time as usual.
Charles, can you hang on for a few minutes? We're going to chat about AI. Quick, some of the updates there.
Absolutely.
Yeah.
Our general tendency is to prepare way too much material for the show and then get into an interesting conversation with somebody such as yourself. So it's like it's a win for us, even though we're completely off the rails. But just really quickly to get to Michael, because so much is happening so fast in AI.
You got CoreWeave IPO. You have the CoreWeave IPO, and that feels sketch, but obviously it's got big names behind it.
Yep. Go ahead, Phil.
What's the biggest story this week, Mike?
Well, a couple of things, 2 or 3 things. CoreWeave is obviously, we'll watch that. We can come back to that because we'll have the market trade information shortly. It's a neo cloud. It's supported by Nvidia. Jensen mentioned them with love at the GTC conference, which is the big news I wanted to talk about this week, because he had his annual GTC conference. If people are interested in AI, they should watch the keynote, at least the highlights of it. I did a post on this. It was a keynote targeted toward deep techies. So Charles, I'm sure, grooved on it. He probably bought one of the Nvidia's local machines that they're put up on pre-order, as that is.
I emailed my Nvidia dealer about it.
Thank you. Here you go. So so there's a huge amount of tech stuff in there, and the core 2 points I want to highlight about Nvidia is they gave more visibility on their product line than any tech company I have seen in the last 30 years. If you're any one of Nvidia's partners, and competitors, exactly where they're going to hit the ball. It's like Michael Jordan telling you,
they're calling their shots.
Calling the shots. They're calling the shots 4 years in advance in terms of the going from the Hopper chip to the Blackwell to the Rubin, and then the Feynman, my favorite physicist of all time. And that's all over the next 4 years with 2 annual TikToks. And the more important thing is they're building their technology to where AI computing is going at a scale. Even most of the participants in the industry, including the large language model companies and the hyperscalers, are not yet truly comprehending, because the amount of hardware engineering you're going to need from a chip and memory and storage point of view, the calculations, we have not seen that in 30 years. The CPU has never had to do this. what the GPU in the millions is going to have to do. I'm going into the engineering weeds. And so if you're an investor long-term in NVIDIA like I am, this gives you a lot more comfort on that position, regardless of the near-term volatility. Near-term volatility, the next 2 or 3 weeks, the Trump administration is going to make a decision on Biden's AI diffusion rules. This one is an important one. Nvidia and Oracle, some of the hardware companies, are basically telling the administration to throw those away. That may or may not happen. The diffusion rules are important because it divides up the world into 3 tiers in terms of the market for American technology. And NVIDIA is 15, 20% in China, 30, 40, 50% over around the world. The more licensing requirements we have for our customers of NVIDIA products and other American hardware companies' products around the world, the more delays, the more friction is what Charles was talking about in terms of the friction in the US in terms of online gambling. And we need to be that regulation piece to be removed. That's a big one. If the Trump administration goes a little bit anti-Biden on that, that's a good thing for NVIDIA. I just wanted to point out. And then the last thing I just want to say, no, because we're running low on time. This week was also the worst news for Apple on AI. Today, the Apple credibility on its ability to do anything in AI is at the bottom, the nadir. They had to reorganize their Siri team. They had to acknowledge that Siri is delayed a few more months in terms of AI capabilities. I think still that the world is underestimating Apple's opportunity in AI on a bottom-up basis, especially with the innovations that we've seen around DeepSeek, the kinds of things NVIDIA is doing in terms of local AI. I can talk more at length, but I continue to double down on my conviction on Apple's ability to do very cool things in AI with its billions of users, with privacy and trust at scale in the next 2 or 3 years. And so right now, the expectations are at the bottom here. Sorry. Go ahead,
they're losing the daring fireballs, and I don't blame like a daring fireball for throwing in the towel. He's a tech guy, and he has the vision of Apple as a child, right? His child, like the child that he knew that was an underdog. Now that this interplanetary beast and their best growth product, I shared earlier, and it was funny, is on Twitter, is me losing my AirPods is their growth strategy. And you know what? That's a better strategy than most Fortune 500 companies, because you know what?
And on that front,
losing my fucking AirPods. I'm always
Howard, I had 2 posts on this.
Dangle, because I'm buying accessories so I don't lose my AirPods. So that's
I have 2 AirPods Pros unopened as a backup.
They're going to figure this out. They're going to be a meaner company because of it, because they're going to be coming from the bottoms up.
Charles, last word. Charles, last word.
If I may add on AirPods,
hang on.
They're adding real-time translation and cameras, AI.
Yeah.
No other company on the planet is going to do that, and that's in the next 2 years.
Everything.
So anyway,
I'm super bullish on Apple.
Apple Silicon is incredible, and it's greatly underrated. It's they have this unified system on a chip where they put the GPU memory, and the GPU memory in these GPUs is the most expensive component. It's more expensive than the actual GPU chip. It's the high bandwidth memory. So they put that on the same system as the CPU. So you get vastly more GPU bandwidth on the same system at way lower cost. And then with DeepSeek, all this stuff is going in the direction of Linux, okay? All these AI models are basically going to be free and open source and incredibly powerful. And there'll be different flavors. There'll be Fedora and Red Hat, and there'll be, Ubuntu and Tena and thousands of other ones. People will roll their own and make their own stuff, but it's all going to be incredibly effective and powerful and cheap and free. And that is a beautiful setup for Apple. Now, the question is, how long does it take them to put it all together?
Yeah, that's why they're a staple of my Degenerate Index, because they also own the interface to get you into the degenerate economy, right? Like in the end, no matter where I place my bet, I use my iPhone, and I was happy. I may be complaining about certain things about my iPhone, but I still place my bets through it. A lot of great stuff, boys. The license to be more ambitious. People need to take this seriously. It's a wonderful quote. This sums up what this era is about. the VCs will pitch it one way, engineers will pitch it to you another way. As a 60-year-old person, I would tell you it's never been a better time for a businessman to enter the world. You don't have to cheat. Cheating's allowed right now. It's a breakaway. Cheating's in a breakaway mode. We're surrounded by cheaters, but that doesn't mean you need to cheat. But we are entering this license to be ambitious, and it shouldn't just be Elon that gets to be ambitious because he knows how to see the future. This is a chance for business model innovation. It's a chance for innovation in every sector. But good chops there, Charles. Nice chops on the AI. Fuck,
Just trying to pull my weight here. Thanks for the invitation, gentlemen.
And
Great
Phil,
having you on.
any final words, and we'll let these guys get back to work.
That was the final word. I only have surely you're joking, Mr. Feynman. We were talking about the Feynman chip. Great book for anybody who's not familiar with
Awesome book.
With Michael's illusion.
Including his YouTube
day. Charles,
lectures.
thanks again for coming on. Charles Dizzy Gillespie. Great to have you. Howard.
All right, GAMB is a ticker. Come hang out and follow it on Stocktwits, and we'll make them a regular quarterly on the quarterly calls over on Stocktwits as well.
Adios.
All right, everybody.
Happy to do it. See you guys.
See you. Thanks, guys. Just keep the
Thank
tab
you.
open so it loads, Charles. All right.
Uploads.
You got it.